Yeah. What's up, everybody? Welcome to What the Fick. We're back after like a week-long hiatus. Spencer Israel, joined by Ian Cully, head of Fick at All Star Charts. Mr. Cully, how are we doing?
Excellent. On the mend, feeling much better.
Good. You're feeling better. That's great to hear. What's not feeling better is the US dollar. That's what we're going to talk about today. The performance, or I should say, the weakness of the dollar, why that's happening. More importantly, probably most importantly, why it's not necessarily a bad thing. And then lastly, how you can trade it and profit off of the dollar falling. So, Ian, you came prepared with some charts. Let's pull up the US dollar index, ticker DXY over here. What are we looking at? And talk us through this chart and tell us why it's happening.
Well, dollars dropping below shelf of former highs from 2016 and 2020. The key levels is actually around 101. We'll zoom in a little bit here to the weekly chart. At 101 level has acted as support for the first half of the year. Now with the dollar undercutting that key level, the path of least resistance for the US dollar index is now lower. And after almost 2 years of not hitting an oversold reading on the 14-day RSI, we got it earlier this week. So that's confirming that the bears, the sellers, are taking control of the US dollar index and they're driving prices lower. Still trading below 99, still trading below 100 today. I think the futures around 99, just below 100 as we record at 99 and a half.
So the thing about the 14-day RSI is it can read oversold, and that's not an indication that it's gone too far.
No.
That's just an indication of who's in control. It can stay overbought or oversold for as long as it feels like, right? Right. So it's just an indicator of who's in charge here. You're saying the bears are in charge.
Yeah, so when I look at the 14-day RSI and just momentum in general, I'm looking more at regimes. I'm looking at more of, are the bears in control? And like you said, or the bears, or the bulls in control. You notice there's a bullish regime, going back all the way to the beginning of this parabolic advance in the US dollar index and, May of 2021. And that's remained intact until earlier this week. So it's a big shift in momentum. Think of it like a basketball game. All of a sudden the momentum is shifting to the other team and they're starting to put up points and they're going on a run. That's the bears right now in the US dollar index.
Makes sense. Without getting too macro and too fundamental on us, why is this happening?
Well, my understanding is that what really drove this parabolic advance in the dollar over the last year and a half, most of 2022, had a lot to do with the Fed's hiking cycle and how aggressive the Federal Reserve was in their hikes. Far more aggressive than the rest of the world, or at least developed world, far more aggressive than developed Europe. Right now, the market's starting to price in the Fed pausing, right? Potentially cutting, but definitely pausing, while England, Europe, the other developed, major developed countries in the world are continuing to hike. They're not slowing down yet. So I think we see a little bit of shift here, simply based on that.
Let's look at the dollar compared to other currencies right now. Obviously, the dollar index is just measuring the performance of the US dollar. But let's look at some currency pairs. Let's see, how is the dollar doing right now against like the euro, et cetera, et cetera?
Well, it's the euro's ripping higher, right? The dollar's not doing well against the euro, and the euro trading above 108 was one of the key developments for my bearish dollar thesis. It was the euro trading above 108 And the commodity currencies, the Aussie, the Canadian, and the New Zealand dollars reclaiming their July pivot lows from last year. And both are starting to link up now as the dollar finally resolves below 101. We're going to have oversold print again in the 14-day RSI. So a lot's lining up for US dollar bears. However, when we look at the US dollar advanced decline line here, 29 pairs. This is a broader look at the dollar, not just these 6 major currencies here, or even the G10 currency that basically adds index that adds some of those commodity currencies into the mix, not making fresh lows along with, again, the DXY and our other G10 currency index. So that's something to pay attention to. And what's interesting, a lot of these emerging market currencies are still trading above their near-term moving averages, even their 20-day moving average. So there's still a lot of a healthy breadth among the emerging market currencies that we're not seeing in developed. Well, we have some emerging markets here, Mexican peso, but these are in the South African rand and the real. But for the most part here, the dollars is catching lower versus these developed market currencies like the pound.
And so is it like it's the same across the board, right? Where every other currency is doing better against the dollar, right?
Yes.
Okay.
Yes.
But some more than others.
Yes. Like I said, the developed market currencies are doing far better than emerging market currencies. Aside from the Mexican peso, that's been an absolute beast. We've been along the peso for it seems like almost a year now. Even the Brazilian real is doing well against the dollar. Interestingly, a lot of Asia is not. The Korean won, the Malaysian ringgit, the Thai baht. We're seeing potential failed breakdown on the Thai baht, but as you can see here, they're still holding above these near-term moving averages. Even look at the 100-day moving average. That's seeing more green there than red. Nevertheless, the emerging currency fund CEW is breaking out and challenging fresh 52-week highs. So,
So from a currency standpoint, it definitely pays right now to be bullish. Everything except for the US dollar. But let's talk about why the dollar falling in price is not necessarily a bad thing. People might, maybe you see the headline on this video, see the dollar is tanking. Oh my gosh, that's horrible. Not really though. Why is it not a bad thing?
It's a great thing. It's a great thing. A weaker dollar has acted as a tailwind for risk assets worldwide for the past 7 to 8 years. It's a really, really strong negative correlation. He's really, really kicking off here in 2016, 2017. And lower pain here, we have a 40 period rolling correlation, extreme negative correlation right now between the US dollar and the MSCI All Country World Index, the ACWI, right? Global risk assets, global equities love a weaker dollar. Break into fresh highs, dollar break into fresh lows. I imagine that relationship continues to play out. So, and stocks are doing really well stateside as well. So I think a weaker dollar just continues to boost higher prices in the equity markets, and even among commodities, especially precious metals.
So yeah, so that's a great point. And I want to just repeat the risk assets thing for a second. So a falling dollar, it's really bad. It's really only bad for anybody that gets paid in US dollars but needs to convert that to another currency,
Right.
right?
If you're working overseas and you're
Right,
getting paid in dollars, and yeah, it's
right,
not
yeah. Then that dollar is not going as far for you.
right.
If you live and work in America and you use dollars as your primary currency, it doesn't really affect you in any way. Also the same goes for corporations, right? Corporations, um, you know, it affects how they do business. But for risk assets, like you said, for investors, if you're investing in stocks or whatever, a falling dollar is good for risk, good for stocks, good for equities, right? So
Yes.
as investors, we like to see this. So we're very, yeah, Nick's right. Unless you buy gas or eat food. Well, not necessarily, Nick. No, that's not necessarily true. So anyway,
Yeah,
as
and to that point, Spencer, those international companies, I mean, they're out in the markets hedging their currency risks. So they're
right, right,
extremely active. So I'm worried about those guys.
right. So yeah, falling dollar has correlated with rising global equities for the last decade or so. So that's why not necessarily a bad thing. I see another question in the chat, Jonathan. We'll get to that one in a second. Where were we going before I interrupted us? We were talking about
We're talking about it started to shift the conversation towards precious metals.
okay. Oh right. Commodities. Yes. Okay, that's what Jonathan asked about.
Yes. Before we get to precious metals, I'm going to share this chart real quick, and it kind of follows what we're seeing here with a weaker dollar is great for global risk assets, global equities. Breakout and these emerging currencies are great for the emerging market ex China ETF here, EMXC. And it's the same thing, weaker dollar, great for emerging market equities. But in terms of precious metals, gold's reaction has been pretty moot. It really hasn't done much. It's trading, it has, caught higher along with the entire space. And it's continuing to trade above those former 2011 highs, which is a big level for me around 1923, 1925. But it's not catching higher nearly at the same pace as silver. And JC are kind of been pinging each other back and forth. I don't know what's the reason behind that? Like, shouldn't gold love a falling dollar just as much as silver or any other precious metal? I think a lot of it has to do with real yields. As the dollar has rolled over and has actually been trending lower ever since it peaked last fall, real yields and yields in general have remained buoyant. Right? And we actually had a failed breakout a couple weeks ago. So I think this has more to do with why gold isn't responding as well to the weaker dollar. Silver.
What would gold typically? I mean, gold isn't. Is gold a risk asset? Gold's not a risk asset. Would gold typically go up in a falling dollar environment?
Yes, absolutely.
Oh,
yeah,
okay.
big time.
Shows
big
what I know.
time. I mean, it's hard to just, everyone labels gold as something else. Some consider it a defensive asset. Some consider it a hedge against inflation. But gold certainly enjoys a weaker dollar. 100%.
Just not right now.
Well, I mean, it is catching higher. I just think there's the yield, the real yields are kind of dampening the rise in gold due to a weaker dollar.
Got it.
But I think it's interesting to zoom out though, and look at the chart of the 10-year real yield inverted next to a chart of gold futures, and they inverted the real yield to show the negative or inverse correlation between these two markets and how strong it's been over the past decade. But what's really interesting is that as much as real yields have risen, or in the past year and a half, 350 basis points, right? Real yields have ripped 350 basis points in the past year and a half, and gold futures have gone nowhere, relatively unchanged. Right? Didn't really affect gold that much. We just kept gold at bay, and I think that's kind of what's happening now. And if we look back at the early stages of the prior commodity super cycle, going back to 04, 05, I mean, real yield, the 10-year real yield rose 150 basis points between 04 and 07. And during that period, gold clocked almost 80% gains. So gold can rise in an environment where real yields are elevated or continue to trend higher. It's not it's possible. It's possible. And I think it's really impressive to see that gold has gone relatively unchanged during this recent explosive rally in real yields.
Okay. Yeah. So what's next? We have silver, right?
Yeah, silver's been doing really well, and I think that's the case here.
Silver is risk on. I know that.
Yeah, silver's risk on. Yeah, absolutely. And it's risk on for the precious metal space in particular. It's it's the high beta play, joke around and call silver gold's crazy cousin. So to see silver, up almost 8% in the past two sessions, trading above 25 today. I mean, reclaiming that 2450 level. I mean, that's extremely bullish. Let's see if we get an overbought reading here to kind of confirm this upside move here in silver. GDX. I mean, look at peaking. It's still early, but I mean, the candle in GDX this past week is, extremely bullish. This is a wide-bodied bar. Extremely bullish, coming 2 weeks after a bullish reversal candle in the form of a hammer. We were buying the dip in GDX a couple weeks ago. That trade's working out beautifully. And just to see silver outperforming gold is extremely bullish. So, falling dollar, it is still putting a bid in the precious metal market, even if you're not seeing in gold. I think that's the message I want to make sure everyone gets.
So just to recap the situation here, dollar going down as a result of the U.S. Federal Reserve indicating that they are likely to stop raising interest rates. Potentially, there is a Fed meeting. When is it?
I mean, that's what the market's pricing in.
Right, right.
Yeah.
Fed's in 2 weeks, right? So they're probably gonna, the market's saying they're probably gonna raise rates at that meeting, and then like the market thinks that'll be it. The market thinks that because that's kind of what the Fed has said. Meanwhile, elsewhere in the world, in Europe, central banks continue to raise rates, so that the economy is acting as a drag on the dollar, which, as we've said, and I'll say it again, good for risk assets, good for stocks, right? So as investors, we like a falling dollar. It's just so, if you can go back to like the dollar index charts at the top, it's just so interesting that the dollar was so strong in the last well, no, because it peaked in September, right? So it was so strong really for I guess the first half of last year, the first 3 quarters of last year. Not so much in the last quarter, but it was just it was going up and up and up, and the major U.S. stock indexes were going down, and around the time that the dollar stopped going up is when the U.S. stock market stopped going down. So I don't think that's a coincidence there.
Yeah, absolutely, 100%. But dollar peaked September 26th. Dollar index peaked September 26th, and S&P 500 bottomed October, the second week of October, first week of October, October 10th, maybe.
There you go.
Somewhere around there.
Again, so as investors, we like a falling dollar. If you live overseas and get paid in dollars, sorry, I guess. But hey, these markets are cyclical; they're always going to change, right? So
Buy stocks.
I think buy risk assets. I guess that's the takeaway here on the show. Jonathan asked about the Canadian dollar. I don't know if we have a chart handy, but I don't think we.
I can pull a chart up.
I don't know. I don't know if we necessarily need one. He's asking, will the Canadian dollar rally if precious metals take off? He's just asking about the correlation there.
Yeah, I mean, the Canadian dollar should do well in an environment where commodities are doing well.
Yeah.
Yeah. So precious metals catching higher, crude oil catching higher. I think
right.
Crude oil trading back above that 74 level, completing that multi-month consolidation. I think crude oil heading back up towards 83 would be a positive development for the Canadian dollar. I tend to look at crude more closely in relation to the Canadian dollar than say gold.
Really?
Yeah, absolutely.
That's interesting. I always thought Canada was heavy on the metals and the mining. I mean oil too.
They absolutely are. They absolutely are. But crude plays a major role too.
Interesting. All right.
Yeah.
All right, guys, we do this show, What the FICC, twice a week, every Wednesday, every Friday, 11:30 a.m. Eastern time. And what we like to do, or what we've been doing, is we've been just sort of dedicating each show to a specific market, or at least most of the show to a specific market. Today was the dollar. Last time we did the show, it was gold. If there's a specific market you'd like us to focus on, whether it's anything in the world of commodities, fixed income, or currencies, right? So any specific bond market, any specific commodity, any specific currency or currency pair, anything that you want us to focus on, let us know, and we will do a show about it, and what's happening in that market right now, how that market relates to other markets, because that's the big thing, right? Because markets are all connected. So Jonathan agreed with me on my surprise about the Canadian dollar being correlated to oil. So okay, I'm not alone there in my confusion.
You know what? I'm gonna throw some charts together. That's a great time. Right. I'll bring him next time.
Guys, Ian Cully is part of the All-Star research team at All-Star Charts. The links in the description. Go to his blog, as well as his Twitter account. Also, Ian helps put together the chart of the day email. It's a free email. Goes out every single day, I think. Chart of the day. So it must go out every day. Link to that is also should be in the description, should be on the screen now. If you want to get access to Ian's research, you can read his blog, but the best way is to join All-Star Charts Premium. You can do that by going to allstarcharts.com/join. You can always call the number that is on the screen and learn more about that there. But that's how to get access to Ian's research is that's Ian does an entire what we call a conference call every single Monday.
Just on gold, precious metals, gold,
just for All-Star Charts,
mining stocks.
Yep. And that's only for members. It's only for members, and it's every Monday. So the only way to get that, again, allstarcharts.com/join. Ian, good to have you back, man. Glad to see you feeling better. The hair is looking great as always. We'll talk to you again next week.
Sounds great. Have a great weekend, everybody.